G'day guys, welcome back. Today I'm gonna share with you some of my thoughts about this new Australian startup. It's called Perla. They've been promoting boring investing, passive investing. Is it worth it or no? Let's check it out. So Perla is a startup that has been growing really fast. It's grown from 100k into 10 million in the matter of 6 months. It is famous for advocating for ETF investing, boring investing, or anti-Robinhood, where they pretty much against of people picking up stocks for themselves. The upside is that yes, they have cheaper management fee compared to the competitors like CommSec, even CommSec Pocket, and so far they have the cheapest brokerage fee. So anything under $17,500, the brokerage fee is $9.50, and anything above will be 0.055%. So I constructed this chart to compare when you buy shares or ETF through CommSec platform compared to Perla. So Perla is a blue line, as you can see, is definitely lower in total percentage because CommSec, they have the first, so for CommSec is $10 for up to 1,000, as from 1,000 to 10,000 is $20 per trade. So overall, if you compare Perla and CommSec, yes, it is cheaper from any kind of investment you make. So anything below 30,000 is lower in cost compared to CommSec, but anything below $1,000 is just 50 cents difference. So CommSec is $10, whereas Perla is $9.50. My opinion with this is that cheaper doesn't always mean a good thing. Cheaper could mean that people are more, it's more tempting to people to trade. To when they see an opportunity to sell, they're gonna sell it instead of what they're promoting themselves to be a passive, boring investing, to always contribute and keep it growing to achieve your financial goals. They also have this feature where they work with some fund managers such as ETF Securities and VanEck to produce this feature called free ETFs. And there are 43 types of ETFs so far that the investor can choose from. What essentially happened is that the investor must meet the requirements for this ETF to be free. Free means there's no brokerage fee of that $9.50 of buying it. The investor has to hold it for at least 12 months. So if the investor hold it for more than 12 months, the fund manager who provide the ETFs will pay Perla for the brokerage fee. Therefore, if the investor decided to sell the ETF before the 12 months, the brokerage fee will incur for the buying and selling, so it's $9.50 times 2. They also have this feature of auto invest, which people think is the most efficient way. There are also people debating, is it better to buy in small lots or is it better to buy where your fee is the smallest? For example, in CommSec Pocket, although the choice is limited, only 7 ETFs, you can purchase anything below $1,000 for just $2 brokerage fee. That is great. That's why I always prefer CommSec Pocket as opposed to buying on the CommSec platform itself. Whereas the Perla Auto Invest, you still buy the ETF for $9.50 if it is not the free ETFs. And it's still just like a regular transaction. So if you buy, say, if you spend, say, $100, your brokerage fee is still $9.50. Instead of where in CommSec Pocket, you can just pay $2 for the brokerage fee. So that's something to think about. Even though the chart shown that over $1,000 Perla is cheaper, but below $1,000 CommSec Pocket is definitely cheaper. And CommSec Pocket got all the ETFs that you need to get started, at least. They also partner up with a lot of financial influencers, YouTubers, TikTokers. I'm not against this, but just so you know, these people earn commission when the investors sign up through their code, kind of like a marketing campaign. Like for example, for this video, this is not sponsored by anyone. CommSec Pocket doesn't sponsor me. I'm just giving the honest and the best option for the investor. I even was gonna do some video about how this fin influencer invests their portfolio, because some of them are not investing the best way they can. Some of them taking too much risk, but I don't know, maybe that's just how they like it. The one thing that I don't like is that financial influencers who are saying, oh, you should do passive investing, you should invest in ETF, but then the ETF is a hedge fund. It's a hedge fund that use leverage, that use gearing, that use borrowed money. That's not passive investing. That's just the same as burning your money, because those hedge fund will end up taking the profit out of you and keep it for themselves, the fund manager. We should stick to what Jack Bogle said, go for the low cost index, just like what the Vanguard did for the S&P 500. That's the classic traditional index fund. But my opinion with Perla is that it's still a new and developing. Yes, it is cheaper compared to other platform. It's a flat fee of $9.50 up to $17,500. However, it's also more tempting to people to trade, and that's what's exactly happened with Robinhood. The brokerage fee is so low, everyone just keep trading. And the free ETF, I don't know what's the 43 options. It could be great if you are not thinking to move around the money that much. So you know as well, under $1,000, CommSec Pocket is still cheaper compared to Perla. And one last thing is that just because a financial influencer have $100,000 worth of shares or 1 million worth of shares doesn't mean that they're doing it at the risk that you should follow as well. So I think a lot of this platform try to say, oh, there's this financial influencer, copy that portfolio, mimic that portfolio. It's not always the best case for each of us, because each of us has a different needs. A pensioner who expects more regular income has different needs to someone who is younger and wants a bigger return, as opposed to just a regular income with a slow growth. And what's putting me off as well is that if you're really rich and successful, you shouldn't take advantage of those people you're influencing in. So that's it, guys. My thoughts about Perla. Let me know what you think, and thank you so much for watching this video.